Associates. I'm going to be joined here with Dale Allentenny shortly. He's having some technical issues. I want to say happy Veterans Day to the veterans out there. Saturday, November 11th, 2023 is Veterans Day. It's being celebrated tomorrow, Friday. So we want to talk about VA loans today in celebration of the holiday. I want to start off by saying my dad was a veteran. He flew in airplanes in the Korean War. So I have some, rights to say I'm part of a veteran family. So at Gust & Cho Associates, we love VA loans. It's one of our highest, high points of what we do. We help a lot of veterans that can't get help otherwise. A lot of VA rules out there that banks have what's called overlays on them. So we don't have overlays. We can do things that we get calls from people that just one little thing that they don't do, we do it. So I'm going to go down a list of things that kind of give you an idea of what we're doing here. We go down to 500 credit scores. There's 95% of banks won't do that. We'll do manual underwrites. There's a lot of banks that do that, but I'm going to get into what they don't do in the manual underwrites that we do. We do DTI and manual underwrites up to 65, and we go unlimited DTI on approved eligible on a computer. So the problem with the approved eligibles is you have to pass what's called a residual income test. So going to 80% DTI is probably not going to work, but we could, in theory, go to 80% debt to income ratio. But we do 65 manual underwrite DTI, which is unheard of in this industry. We do veterans who are in Chapter 13 bankruptcies, which not many people are doing. We do manufactured homes. Not a lot of people do VA manufactured homes. One of the best things that we do is if you've got collections on your credit report and you're not making payments to the collection company, we'll hit you for zero payment, and that's okay. A lot of banks want you to pay those collections off, or they come up with some kind of payment that they have to hit you for. We hit you for zero on collections that you have no payment plan on. And if you're doing a manual underwrite, we allow for disputes. So if you're disputing your credit report because you disagree with what the collection company is saying, and your score goes up 30 points, we can have that dispute on there in a manual underwrite. Now, when you get an approved eligible on a computer, so it's not a manual, then the disputes can be up to the computer saying if they want you to remove it or not. So the disputes on the approved eligibles may or may not have to be removed. We're doing cash out to 100%, which it's hard to find that. Now the pricing on that's really not that great, but we do go to 100% financing on cash out. If you go to 90%, you're going to get a more normalized rate. So those are the things that we're doing here at Gust & Cho Associates that a lot of lenders don't do. They're called overlays. The VA wants these. This is in the VA guidelines, these rules. It just, banks don't want the risk. So they don't want to do a 500 credit score because of the risk. They don't want to do a manual underwrite because of the risk. They don't want to do 65 DTI because of the risk. They don't want to let you get away with having collections with no payments because of the risk. The disputes is a false read on your credit score. So they all have rules. They have overlays. So I get tons of calls saying, hey, the last bank I was at was my DTI was 90%. I look at it, I'm like, I've come up with 55. I can do this. And I said, what were they doing? They said, well, they were hitting me for $500 a month for my collection payment. I'm like, that doesn't make sense. That's not in the guidelines. He's like, that's what they were doing. So if you guys are having any trouble getting a VA loan, we specialize it here at Gust & Cho Associates. It's our bread and butter. So VA loans is what we do. And I get so many times that the VA's recommended us people when they call into the VA and they give them a scenario. I don't even know who's doing that at the VA, but the VA recommends us to people. So that's how much of a footprint we have in this field, in this industry, because we've been doing Gust & Cho Associates for the last 10 years. You're doing VA loans down to 500 credit score. When it was busy, nobody was doing it. Now that it's slowing down a little bit, you see a lot more people doing what we do, but they're not good at it. They're rookies. We are professional loan officers that understand the nuances of a 500 credit score, Chapter 13, manual underwrite with collections, with disputes. You find a loan officer knows how to handle that out there that's doing that for the first time. They're going to make mistakes. They're going to put you in a world of hurt. You're going to go through the underwriting process and be so tortured by this process that they're going to make a mistake. The underwriters will make a mistake. No one's going to be able to figure it out because they didn't know what they were doing. These are very complicated loans. A lot of people stay away from them because of the extra work you have to do. We welcome it. We understand all the rules. So we welcome that here. I think Dale's with us. Dale, you have anything you want to say?
Yeah, no, I didn't hear everything that you said, Alex, but I just want to kind of add to the fact that a lot of people are jumping into this now, and we've been doing it all the way along, even through the refi boom, the low interest rates, everything. We continued to do it. And the stories that we could tell, and I'm going to tell one story here real quick of a guy that I helped a couple years ago. He had a 537 FICO score. He had 7 jobs in the last 2 years. He was a truck driver. He was in Colorado, and because of the bad weather in Colorado, and he hauled big, heavy machinery, that created a risk for his job as far as traveling through the mountains. Thus, he wasn't working. Thus, he fell behind on a lot of his debt, including his mortgage in Colorado. Fast forward, he moves to Florida after 7 verifications of employment with a 90-day late on the mortgage, just over 2 years, a 530 FICO score, and the guy's got a 3-point-something interest rate right now. He got help from the seller on the deal, but the bottom line is it made sense. We wrote a lot of letters of explanation. His credit was clean in the last 12 months. We verified all the employment, and boom, we got it done with a high debt ratio, like Alex was saying before. So it can be done. There's a lot of heavy lifting, but if you're motivated, we'll get you to the finish line.
Yeah. So when it comes to the VA manual underwrites, all we require on the VA manual is 12 months clean. You have to have credit open, like one credit card for at least 6 months, probably better off if you've got 1 year. And you have no lates in the last 12 months, no new collections, and you were a god-awful mess for the last 10 years, didn't pay anything. And now for the last 12 months, you've been on time, and your credit scores, your middle score is 500, we can do that loan as long as you mathematically qualify like a regular loan. So not a lot of people know how to do those loans. So sometimes to get your DTI down, you go ahead.
Did you mention seller paid closing costs at all?
No, I haven't gotten into closing costs.
Okay, so and a lot of times with the people that we deal with, low 500s, mid 500s, manual underwrites, typically those people, the interest rate costs money. There's discount points. So oftentimes, I get this all the time from realtors, like, you can't go over 4% on seller paid closing costs on a VA loan. I go, well, yes and no. I go, if there's discount points, you can go above 4%. So many times, and I'm sure you have too, we've gotten the full 4% from the seller and maybe another 3% to cover the discount points, and that's helped our deals close.
Another thing about seller credits that you can add to that is that you can use seller credits to pay down debts on your credit report to qualify for the DTI. So that's one thing it allows you to do. You can't do that with any other loan. So the VA loan lets you pay off your debt to qualify for the loan with seller credits, which is phenomenal.
Another thing, I seem to be getting more, people seem to be more, because housing is so expensive, more and more people are looking into multifamily housing, and FHA's got certain requirements that prevent people from getting into a 4-unit. But VA, as far as I understand it, does not have that same self-sufficiency test that FHA does. Are you aware of that, Alex?
Yeah, they don't have that, but they do. They make you hire a management company if you want to count the rents on a multi-unit if you don't have experience in the last 2 years. So you can do that. It's, if your rents are, $50,000 a year, you're going to have to give $5,000 of that up the first year by hiring a management company before closing. If you hire a management company, they take 10%. The underwriters are going to chop 10% off of that income, and then they're going to use that qualifying income for you. So that's one way around it. There's other ways around it too, like 10% down, 6 months reserves. There's other tricks to get through using the rental income, but they don't have a self-sufficiency like FHA. So FHA, the mortgage payment has to be covered by all. I got a 4-unit, all 4 units have to pay the mortgage. Otherwise, you just can't close the loan. For VA, they just require experience, or you hire a management company to use the rent. There's no a minimum amount of rent that has to bring in for you guys to use it.
Alex, what did you go ahead?
I want you to add to this because I was going to go on to something else.
Okay, go ahead.
All right. So I want to talk about one of the hardest things about VA loans that I can never tell you in the beginning. I have software that tells me, but it's never exactly accurate. So the toughest thing about a VA loan is at the very end, an underwriter is going to push a button and it calculates it. I've asked the underwriters for this button over the years, and they say, no, it's theirs. It's a special button they have. And it calculates after everything's been verified, the income, the assets, the taxes, how many children you have in your family, you know, where you're at. So there's a thing called residual income. And what residual income is more of a better way of qualifying a person if they really can afford a house payment. So residual income takes into consideration your electric bill, your gas, your groceries, feeding your children, your schooling. It comes up with this weird formula that says what you really have left over after paying the IRS, after paying for your groceries, after paying for your credit card bills, after paying for your car payment, how much money do you have left over? And if you're a single man and you're in Tennessee, it might be you have to have like $800 left over after they do that mathematical, you know, computation. But if you're a family of 7 and you're in Washington State, it might be 1,500. So what they do is they push this button at the end, and to pass residual income is a requirement on all VA loans. So if we're really pressing your DTIs on that 65 DTI manual underwrite I was talking about, it's hard to pass the residual possible. Now, I always tell my clients that if you're making over 80 grand a year, you're probably going to pass the residual, because the more money you make, the more residual you have, because a lot of those expenses in that formula are pretty fixed. Like my electric bill is not much less than a multi-millionaire's electric. I mean, it is less, but it's not that much less in terms of percentage of income. So when it comes to groceries, electric bills, those are pretty fixed things that go into this formula. So that if you make $1 million a year, you're going to pass with flying colors, because your electric bill is not $3 million a month. It's maybe double what mine is, but that's not in percentage of my income that's going to make you fail the residual income test. So I always warn people, if they're on that borderline $50,000 a year, going to 65 DTI, I'm biting my fingernails. If my system tells me it's passing, the underwriters might not. So you have to always be aware of that. Dale, do you want to talk
Alex,
about?
let me add something to your residual. Like in the specific case of a 65 DTI, and as it relates to residual income, it's been my experience, not always, nothing set in stone, every situation is unique, but usually you have to have double the net. So if you're in Tennessee and the VA chart says you have to have a minimum of $800 in residual, if you want to go to a 65 DTI, you should have at least $1,600 in residual. It's not automatic, but it usually goes hand in hand.
I thought it was 120% of the residual requirement.
Nice. Yep. Okay.
But you know, when you're doing these manuals with high DTI and you don't have reserves, that's a problem too. So I always tell my veterans, just try to save money when you're looking to buy a house and you got a low credit score, because reserves always helps the underwriter fly through the manual underwrite. When you got a high DTI and you're really maxed, you know, you're really maxed out and you've got maybe payment shock from what your current rent is to the new house payment, but you got 20 grand in the bank, they say to themselves, I'll do this loan because he has the ability to save money right now at the lower rent. So therefore he has room to pay for this higher mortgage payment or max out this DTI. But if you got no money in your bank and you're doubling your rent to the mortgage payment and you're going to max DTI, the underwriter will say, no, you came and saved money with this lower rent payment. How are you going to handle all this? So always save money for these high DTI manual underwrites.
Yeah, I always tell people, Alex, like if they're in a situation where they're not saving money, or you know, you're paying $1,000 a month and maybe you're thinking about going into a payment of $2,000 a month, you know, pay your $1,000 in rent and save your $1,000. You know, try to show the underwriter that you're going to be able to handle that payment that's eventually going to be your mortgage payment.
Right. And
there's different ways to do it.
Yeah, VA people, you can't have a co-borrower with a VA loan unless they're another veteran or it's a spouse. No children, no uncles, no parents. It has to be a spouse or another veteran. So that's the only way to do a co-borrower with VA loans. So if you think that, you know, if a loan officer from another bank says, let's get a co-borrower and it happens to be your aunt, well, it's not going to fly and you're wasting your time. So that's another thing I want to talk about. Now, when you do have problems and I can't qualify you for a VA loan, let's say you got a 520 credit score and you have a car payment late that was 2 months ago, you're not eligible for manual underwrite. But let's say, you know, you can come up with 10% down. I'm going to flip you into an FHA loan. I'm not going to say I can't help you, but a lot of veterans want the no money down. But if you, for some reason, we're late and you can get 10% down, maybe that's going to work. When you put down payment for FHA and you're below 580 but above 500, putting money down for FHA is more forgiving than being a veteran with a late payment in the last 12 months. So that's a really weird thing. I'm going to say VA is the most aggressive, fairest, most generous loan in the industry, except for the FHA beats it on a low credit score with lates in the last 12 months. That's the only place that FHA beats the VA loan. You agree with
Alex, hell yeah. I mean, the waiting period after a foreclosure to enter into a new mortgage with FHA is 3 years,
that? Yes,
and VA is 2 years.
correct. And when it comes to like a bankruptcy loan, we specialize on bankruptcy loans. And when you're going into a Chapter 13 and you've been in it for 1 year and you made all your Chapter 13 payments on time, if you own your house, you made your mortgage payments for the last 12 months on time, you've been perfect for 1 year, the VA will do that loan. Now, FHA is going to look at a 2-year history, even though you're in a bankruptcy. If you were late on your car 60 days going into your bankruptcy 12 months ago, you're not eligible FHA. So VA is more aggressive right there. Now, also, let's say you've been in your bankruptcy for 4 years. FHA looks at that whole 4-year trustee payment history. And if you have lates in that 4-year window, you're dead in the water. VA only cares about the last 12 months. So in many instances, VA is the most forgiving loan. The highest ETI only looks really at 12 months, last 12 months, unless you do have a foreclosure, it's 2 years they look at. So everything's 1 year with the VA. Just be clean for 1 year, take care of your business, and we can get you into a loan here.
I agree. It's a great product. And you shouldn't dismiss nobody, even if a veteran's not ready now, we'll get you ready. We'll give you the guidance to get you ready so you will get into a house.
And if you do have a late in the last 12 months, you can call the company and beg them. I mean, they're not going to bite you. They're just minimum wage people sitting on the phone, and you're asking them if they can do you a favor and take off that one late, and they'll say no. They're not going to come out of the phone and bite you. So I tell people to call 5 or 6 times. They might get someone who says they can do it. I don't know what the rules are behind these companies, why some can do it and some can't. It's amazing to me. But if you do have a collection that happened in the last 12 months, that will interfere with the manual underwrite. You can always pay to delete it, not just pay it, but pay to delete it. And if it's gone, then you can get a VA loan because we just want 12 months clean. So that's one of the tools we use to help veterans who do have lates just still get into it. If you're not ready, if you're not ready right now, you're not dead in the water. You got a couple of attempts out there to try to get these things cleaned off your credit to make you eligible.
12 months goes by fast regardless. And if you're not ready now, we'll get you ready.
Right.
Hey, Alex, I want to bring up one thing that happened to me that kind of sticks out on a deal that I did not too long ago where the veteran, everybody should have a copy of their DD-214. He had like a garage fire or something, had a lot of things in there, including his DD-214. And that loan got held up because we waited forever for him to get the DD-214. I don't know if you've ever had that experience where a veteran had to get their DD-214 or you had a way to get it quicker, but I just remember that holding up my deal. We eventually got it done, but everybody should have a copy of their DD-214 if they're thinking about, doing something here in the very near future.
Right. And it reminds me of another thing. So if you're married to a veteran and if your spouse dies and they're the veteran, you need to apply for their rights to have the VA benefits. So if you do that now, you can go out and buy as if you're the veteran now, but you have to do applications. You don't just inherit it automatically. There's a process you have to go through. So if you are a spouse of a veteran, keep that in mind that you need to do something if they pass away. And that's a horrible situation, but if you want to take advantage of the VA loan after your spouse dies, that's something you could do.
So the surviving spouse has benefits if the veteran passes away.
Correct, but they have to apply for it. It's not granted. Another great thing that reminds me of is if you're 70% disabled, you don't have to pay property taxes in 98% of the counties in America. Now, you're not granted complete immunity from taxes. Like if the tax bill was 50 grand a year, they're not going to give that to you for free. I think it's up to a 10,000, you get 0. And then after that, there's some kind of mathematical, but it's county by county. And a lot of veterans don't know about this. And when I tell them that, they say, wow, that's the best thing I've ever heard. But here's the downside to it. You have to qualify with the taxes on your mortgage until after you close. You have to go apply for that exemption. That's another thing that's not granted to you. You apply for the exemption, they're going to give it to you. They give you the new tax bill. You call the servicer of your loan after you're paying it, and they'll update your escrow account. It's called an escrow account where they put the taxes in there to pay the next bill. You'll get a refund. So it's like a savings account developing for you, but it does affect your debt to income ratio because they don't assume that you're going to get up off the couch, go down to the assessor's office, apply for the exemption, and you're going to get granted it. and you're gonna come back and do all that. So there's no guarantee, so that's why they're gonna qualify you for that. I have some veterans that know about this program and they think that you can get away with no tax bill because they're exempt, but you have to qualify when you're buying or refinancing your house. If you don't have it currently exempt on your house, if you're refinancing, if it's not currently exempt, you'd have to get it before you close for us to get rid of the tax bill. On all purchases, you have to wait till after you close.
That is the nice thing about having a 65% debt ratio, because underwriters will factor that in, although they have to include those taxes in the DTI calculation. They know that more often than not, the veteran's going to go to their local county office and apply for the exemption, and the DTI is going to be really something lower than what they qualified with.
Right.
But it has to be included in the initial underwrite.
Right. I think we're done here. What do you think, Dale?
Yeah, now you can't do any non-owners with VA, correct, Alex?
No, you can't. You can do a second
It's,
VA
it's
loan.
purely an owner-occupied transaction.
Yeah. So if you're relocated and you know from Chicago to Tennessee and you can't sell your house because the economy's bad and your work's moving you down to Tennessee, you can get a second VA loan as long as your secondary eligibility allows for it. And that's a calculation that I always have the client call the VA. So if you have a $200,000 mortgage in Chicago and you're buying a $400,000 house in VA, there's a highly likely chance that you're going to have enough eligibility to qualify for that next house. But if you got $1 million house in Chicago and you're trying to buy a $2 million house in Tennessee, I doubt you can have 2 VA loans that size. But again, I could be wrong. It's a complicated formula based on where you live, what this, that, and the other thing. So keep that in mind, that you can have 2 VA loans, but they can't be for investment. And don't even try to say that you're buying a house for owner occupied if you're not going to live there. They're zooming in on that kind of stuff right now, and they're going to come back after the mortgage is closed and take your house back from you. It's really
Right.
bad out there. Occupancy fraud is really rampant. It's all over the news actually. The last couple of days, they're finding out that people bought second homes saying they're going to live there, and now they're listing on Airbnb. And now the Airbnb is not producing enough income, and now they're going late on the mortgage, and that's why they're looking into these, and they're going to start going after people. So be careful. Just don't try not to do anything wrong when you're trying to apply for a mortgage. It's you know, these banks are protecting themselves now, so and they're doing the right thing. So keep that in mind. All right, we're going to wrap it up. I want to say thank you guys for watching us on Facebook, and you can go on YouTube and probably see this video there later, and go to our channel at Gustin Show, and subscribe and like our videos. It helps us help you guys. Dale?
Yep. Thank you again. I appreciate all the veterans for their service, and check us out on Facebook and YouTube, and we'll be doing more videos this week. Happy Veterans Day.
Happy Veterans Day. Thank you.
Bye-bye.